Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending August 26, 2022. And I'm going to title this video, Powell Pivot? Not so much. And that's really what Jerome Powell, at least was perceived by a lot of people in the market, that he gave a hawkish speech at Jackson Hole. But I'm going to kind of show two sides of the coin here because the equity markets certainly viewed it that way, but other parts of the markets, mainly the currency and the bond markets, didn't really do that. Okay, so that's what I thought was very interesting, and this is the first one. I've been following this, the CME groups. This is their Fed tracker, so just to see what the market is pricing in when it comes to rate hikes. And so the rhetoric was, oh, hey, we're going to do 75 basis points, or we're going to remain aggressive, but we're going to be some data dependent, kind of as usual. To me, it was kind of what they've been saying, so I didn't see it as super hawkish. It just wasn't dovish, which I think a lot of people were hoping for. And you can see that in here, the probabilities for 75 versus 50 basis points at the September meeting. And yesterday, it was at 64% that it was going to be a 75 basis point hike. Well, today, in this supposedly hawkish statement by Jerome Powell, it's down to 61. You would think that would skyrocket, go all the way up to 80, over 80. That's when this is pretty much guaranteed. That's what the Fed is going to do. But it actually went slightly the other direction, at least for the September meeting. And pretty much look at the future meetings, pretty much unchanged. Slightly lower chance that it's going to be a minor increase between now and November, but pretty much the same. Still kind of split between that 325 and 350 by the November meeting. That was the interesting part to me is everyone's calling it down in the market, but the bond market and the currency market, which I'll show you in a minute, isn't really saying that. So we'll dig into that in a second. But I did want to get to the economic data, and I think this is why there isn't that reaction in the bond and currency markets. Because if you look at the economic data that came in this week, it's pretty weak. Now, this is July, so obviously a little dated, but consumer spending, personal spending, month over month was almost flat, okay, which is obviously not a good sign. Then you have PCE price index year over year. That decelerated again, something that was expected, because remember, this is a July number. We already have prices paid index, ISM prices paid index on the manufacturing and services side for July, as well as the CPI. So this wasn't really a market-moving event. But these ones were. The Richmond Fed Manufacturing Index, remember, this is for August. So this is pretty up to date. And so this was a -8 territory. And you also had the Kansas City Fed, that was -9. So both of those on the manufacturing side were shrinking, okay? And then you dig into the details. Here's prices paid trends. That was relatively flat, so there wasn't really weight pressure there. And then when you look at new order volume, -20. Prices paid received trends, that's at about 9%. So still hanging in there overall, at least on the Richmond side. And then, prices paid trends, that's down a bit to 12%. Then you go over to Kansas City and you see that the prices paid for raw materials index, that's down all the way to 38, which is the lowest level in a while here, right? Since this whole inflationary scare. And then you look at the prices received index for finished products, that's down to 25. Once again, the lowest level since the beginning of last year. And so, we're starting to see that round trip on inflation. And to me, these are things that are kind of stacking up for the coming months when it comes to inflation data. The economy is certainly slowing markedly, and I really wanted to touch on this. Next week we have on the 1st, or is it? There we go. The 1st, we're going to have the ISM. This one, the prices paid index. And this is something you really want to follow because this is a good leading indicator to where inflation is going to go. Now, a better one will be the ISM servicing prices paid index, this one right here. and that one certainly decelerated markedly in July. So it'll be interesting to see what that says in December for August. And the next release will be on September 6th, the week after next. So these are the main ones I'm watching because they do lead what's happening in the CPI, and obviously that's really going to be a factor. And that's why I think the market didn't move much for September, because it's really going to be more about what data are they going to see for the month of August? Are they going to see continued deceleration, or are they going to see an acceleration? If it re-accelerates, I think 75 basis points is in the cards. But if you see a meaningful deceleration in inflation for the month of August, I could see them going to that 50 basis points. So that's what I'm watching over the next couple of weeks. Now let's dig into the charts. We obviously had a large sell-off today, closing into lows. You can't say anything, but this is bearish. Let's see if this wants to load. There we go. It was just, we had a little more patience. There we go. Okay. So we got to this 382 retrace from this recent move, right? Low to high. And certainly that's should be good support. It's also the low end of this range where it's kind of consolidating sideways. So if we do have follow through the downside, that's definitely going to be bearish in the short term. But something, I'll watch is what Bitcoin does over the weekend. And then once again, the fact that let me show you what I was talking about with the currency markets and the bond market. Here's the dollar. Yeah, UB was up, but didn't break out to new highs, right? We were just a little bit higher than we were yesterday, okay? And right within this range over the past pretty much for the whole week. So there wasn't a breakout in the dollar, and you had the 10-year. Here's the 10-year. That's pretty flat today, right? This is pretty much flat. So you could argue this is hawkish. This was already priced in, and then short-term rates. You had the SHY. It's always a good proxy. That was down 2 cents. So it's not like yields rose dramatically. They rose very marginally. So the bond and currency markets aren't having the same reaction as the equity markets. So let's talk about the equity markets a little bit more. So here's my favorite ratio, IWF to IWV, so growth to value, and you can see you're getting that rollover once again in the growth side of the market, just weighing on the market overall. The credit markets, that had a decent pullback. Here's J and K to the IEF, but still above the 50-day moving average, still kind of neutral overall. Let's look at the VIX. The VIX had a decent breakout, but still below that 100-day moving average. So really not a clear breakout quite yet, although, certainly a possibility for more upside. Let's look at the sectors, though. So, for example, what was interesting today is the XLE, the energy side of the market, just continues to roar. It was up it was down a buck, but relative strength there was incredible. So you continue to see the bread and butter side of the market really do well. And I say bread and butter, the hard businesses, not technology, not growth stocks. We've talked about that for a while. They continue to do well. Here's IYT to the SPY, so transportation to the S&P. That's holding up fairly well. And then same with the XLI, which is the industrial side. That one also barely budged today and at a new high for almost the last year. So, you continue to want to rotate into these type of sectors that have strong relative performance. Now, what has strong relative underperformance would be, here's ARC. So here's ARC to the IWM. That continues ready to plumb new lows. If you just look at the ARC, that looks ready to break down once again. We have the SMH, the semiconductor space. I think that one has the most room for falling, and that is in a clear downtrend and big reversal today. So, and then the Qs to the IWM. So, your tech side of the market to your small caps, and you would think that there would be some outperformance in the Qs, bigger names versus those smaller names. Well, guess what? Anything tech related is getting trounced. And you just look at the bigger names today, Google's of the world. Let's take a, there we go. Breakdown there. Meta. Breakdown. I guess it didn't break down. Apple looks like it had a pretty decent drop today. but still overall relatively bullish. Definitely the best chart of the big FANG names. And then you get into, the Netflix, that certainly is just languishing, and the ones that continue to have been struggling are continuing to struggle. The Pelotons of the world and the Zooms of the world. So that's where we're at. You continue to want to have that rotation. I still expect the choppier market through the end of the year as you continue to have this rotation because there are slices of the market that continue to do well. It's just not the exciting names, unfortunately, and it's not the names that tend to dominate the indices right now, which is tech. Okay. Now let's take a look at gold. This is another interesting one. Is gold had a rough day, but it didn't close. It didn't break the lows of the week. So that's what's interesting here. And look at GVZ, the gold volatility index. It barely budged. If this is going to have a huge breakdown, gold volatility should be headed higher. But you look at like the let's see, what was it? What's the Nasdaq volatility index? I can't. Is it the NDX? No. That's the Nasdaq 100. Vixen, that's what it is. VXN. There we go. The Vixen. Yeah, see, that's breaking out higher. Not something that you want to see if you're invested in a lot of tech names. And another ratio I wanted to get to, going back to gold, was the GDXJ to the GDX. If money was going to flow heavily out of this space, more than it already has, the junior miners that don't have any revenue, don't have functioning mines for the most part, they would get hit the most. But they still are holding up relatively well. So it's just kind of an early tell that there might be a turn in the precious metal market by the end of the year. So something I'm watching. But overall, I'm going to be looking at that inflation number next week. I'm going to be looking at what the follow through from today will be in this week, and whether you continue to break the recent support, you do break the recent support, or we have a reversal. And I think based on what's happening in the credit markets and the currency markets, we might have a follow through, but that's TBD, and we'll follow up again next week. So I thank you all for tuning in. I hope you have a wonderful weekend. A reminder that the contents of this video are provided for educational purposes only, should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a great night.